Hi guys, I've been running this AI-generated futures trading strategy in my paper account for the last month. And today I have enough data to share with you and to see if this is a good time for me to move with the real money or shall I continue with a paper testing account. So today we're going to make this decision. We're going to analyze what has been done with this strategy, what finding I discovered, and what is going to be my final line regarding this. So without further ado, let's move on. And so the primary reason for running the strategy in the paper account is to understand that the mechanic of the strategy works as expected. Because when you're using AI to write a code for that strategy and paper and backtest it, it does not work with the mechanic all the time. Because backtesting, it's when it's like historical data is present and there is no real market action is happening. Therefore, the problem can be on all the possible levels: the entry position, the exit position, the stop positions, and overnight trading positions and position sizes. Everywhere can be mistakes over there. That's why it is important to have a paper trading before you're going to go fully live with a strategy, because paper trading allows you to understand that the mechanic of the strategy works as expected, that there's no mistakes in executing your strategy, and there's no mistakes in the code in general. And the funny enough, the very first day I deployed the strategy in my paper account, the very first trade, it was a mistake. And the mistake was the one I would never be able to identify in my backtesting. And the mistake was that the strategy was holding positions overnight. Even though it was not supposed to do, the strategy just must identify is it gap up or gap down and take either short or long position, and shall never, never, never hold them overnight. So this bug was fixed the second day, and there were a couple of other bugs which were fixed during this paper trading stage. So I think the paper trading stage, it is preliminary for all the trading strategies. You cannot simply write a code for your strategy and expect that it is going to be behaving correctly without properly testing with the real market data. And I actually very happy that I did it, because amount of bugs and amount of changes I made to the actual strategy during this paper testing stage, it is enormous. First of all, I was improving the strategy, and I initially started with ORB futures only, then I added MBT futures, then I've added a mini reversion algorithm and all this kind of stuff that was actually implemented during the paper testing to improve the performance of the strategy, minimize risk, diversify portfolio, and all this kind of stuff. As you see over here, the results of the testing, it's actually everything is green, everything except this one, and this just never been triggered, and that's I have here. For Bitcoin strategy, it makes sense to trade Bitcoin when Bitcoin is actually above the simple moving average 200. And this condition has never been met in the recent last month, and therefore this condition has never been tested actually. But it's not a problem for me. I still gotta move on, so it's fine. And now the most important aspect: does my strategy actually does result of my strategy were actually accurate comparing to the result of the backtesting? And here I have the comparisons of the performance of my paper testing versus the backtesting baseline. And as you see over here, the win rate of my paper testing is 50%, and win rate of the baseline of the backtesting is 46%. And I'm not gonna lie, I think my win rate is doesn't have sufficient enough data, because over the last month I've executed only 30-ish trades, which does not provide big enough sample size to justify that this is going to be the accurate win rate. Whereas on the backtesting baseline, the sample size was more than 3,000 trades, and therefore, with volume of trades, I think my win rate is going to be going down to for somewhere around 46%. Now P&L, my actual P&L is 1.31. The backtesting P&L is 151. So very close, but once again, the sample size is not big enough. Drawdown, however, it is the funny because my actual drawdown is just 10%. The baseline drawdown is 35%. And I think this is important to mention that the last live paper testing stage was conducted during a very slow moving summer month of June. And this baseline was tested over the 5 years time frame, during which there were bull market, there was bear market, there were literally all the possible different market conditions, and that was the drawdown. And the drawdown right now it is just not, it doesn't have enough room for airs like that, and there's like the market is just consolidating, so it's not going down. There's no just sell off in the market to have like this massive drawdown. So I'm quite happy with this drawdown though. Now the sleep edge, I mean, everything is fine on that side as well, and expectancy of the trade, it's close to what's been expected from the baseline. As you see here, the verdict is that everything is green. So my paper trading results are actually matches the result of the backtesting, which gives me enough confidence to move with this strategy forward. Although I could continue with the paper testing for that strategy, but I know this strategy is performing best during the slow moving market. And I'd rather move this strategy with the real money and start making me some returns, rather than it's going to be wasting its time and during those best possible summer times. And the reason I developed this strategy is to make me something which is going to be making which is going to be making me money during those slow moving summer month of consolidation. Because in September, usually there's Bitcoin, it moves up, all the equities, it goes up, and there's going to be different strategies. But this strategy performs best during the June, July, and August, exactly the month which are happening right now. And in general, there were some recommendations for me from AI, what needs to be done for me to move on. Because as I said, I've added different types of securities like MBT to this strategy, which consequently increase my marginal requirements. And over here, AI tells me that I need to increase my account size in order to minimize the over leveraging on the MES side. So I need to satisfy these requirements. And when my account is actually going to be 37,000, then there's going to be almost no over leveraging at all. So I'm gonna satisfy that, and I'm gonna move with. So my decision is gonna move with this strategy to the live account. I'm gonna do that today or tomorrow, and then I'm gonna give you an update how this strategy is gonna be performing with the real money on my interactive broker account. Now, if you would like to learn how you can actually create strategies, trading strategies using AI, how maybe you can improve your trading strategies using AI, or how you can leverage AI and nowadays technological stacks to automate your trading processes, I'm gonna drop the link in the down section below to my school community where I'm gonna be teaching those aspects. If this is something of your interest, feel free to join it. I'm more than happy to help you. And thank you very much for watching this video, and I'm looking forward to seeing you in the next one. Take care. Bye.